Listen up, people. Let's talk about a stock that's flying under Wall Street's radar but is making some serious noise. I'm talking about LexinFintech, ticker symbol LX. This isn't some fly-by-night operation. This is a real player listed right here on the NASDAQ. As I'm talking to you today, July 9th, 2025, the stock is trading around $7.30, and let me tell you, that price is a gift. We're looking for hidden gems, stocks that the big funds haven't piled into yet, and LX fits the bill perfectly. It's time to do your homework because opportunities like this don't come knocking every day. This is a story of growth, technology, and a massive consumer market that's just getting started. So, grab your notebook and let's get ready to make some money. So, what does LexinFintech actually do? It's simple, and that's why I love it. They are a leading fintech platform in China, one of the biggest consumer markets on the planet. Think of them as a high-tech, buy-now-pay-later powerhouse. They connect young, savvy consumers with financial institutions to get consumer loans. This isn't your grandpa's banking, this is the future. They have a massive user base of educated young adults who are comfortable with digital finance. They use Lexin's platform for everything from buying a new phone to funding their education. It's a brilliant model that taps directly into the spending habits of China's next generation of big earners. The beautiful part of their model is how it aligns with the macro story. China's middle class is exploding, and with it, consumer credit is on the rise. People want to buy things, and they need flexible, easy-to-access financing to do it. Lexin is perfectly positioned to capture this massive wave of demand. They aren't a bank, so they don't have the massive overhead of brick-and-mortar branches. They are a technology platform, a toll booth, if you will, that facilitates transactions and takes a cut. This asset-light model is scalable, efficient, and incredibly profitable when it gets going. And believe me, it is getting going right now. This isn't just a story about China, it's a story about smart technology meeting a hungry market. Lexin has built a sophisticated ecosystem that includes its popular Fenkel app, which is a one-stop shop for its users. They can browse products, apply for credit, and manage their payments all in one place. This creates a sticky user base that keeps coming back for more. The company has a deep understanding of its target demographic and has tailored its services to meet their specific needs. This isn't just lending, it's building a long-term financial relationship with millions of upwardly mobile consumers. That's a recipe for long-term success, folks. You want proof? I've got your proof right here. Let's look at the numbers because the numbers don't lie. In the first quarter of 2025, LexinFintech knocked it out of the park. They reported profits that hit a 3-year high. Booyah! That isn't a fluke, that's a sign of incredible business strength and operational excellence. While other companies are complaining about the economy, Lexin is executing flawlessly. This shows that their business model is resilient and that their management team knows how to navigate the market. Strong earnings are the fuel that sends a stock price to the moon, and Lexin is filling up the tank. But it's not just about the profits, it's about the technology that drives those profits. Lexin is a leader in using artificial intelligence to power its business. Their AI-driven risk management system is the secret sauce. It allows them to assess credit risk more accurately and efficiently than traditional methods, which means lower defaults and higher margins. This technology is so good that Lexin recently won a major industry award for its advancements in financial AI. This isn't just some participation trophy, this is recognition from their peers that they are at the cutting edge. When a company has a technological edge like this, you have to pay attention. This AI advantage is a huge moat around their business. It allows them to approve loans faster, offer more competitive rates, and keep their loan losses in check, even as they scale up their operations. Think about it. In the lending business, managing risk is everything. The company that can best predict who will pay back their loans is the company that will win. Lexin's investment in AI gives them a sustainable competitive advantage that will be very difficult for competitors to replicate. This is the kind of forward-thinking strategy that separates the winners from the losers in the fintech space. The strong performance and technological leadership have not gone unnoticed. We're seeing strong institutional support for the stock, with some of the big money players starting to build positions. On top of that, analyst ratings have been increasingly positive, with many raising their price targets in the wake of the stellar first quarter earnings report. When the smart money and the analysts start getting on board, it's often a sign that a stock is ready to make a major move. They see what I see, a fundamentally strong company with a clear path to future growth, and they want a piece of the action. Now let's get to the best part. The part that gets my blood pumping, the valuation. You can have a great company, but if you pay too much for the stock, you're not going to make any money. With Lexin, you're getting a growth story at a value price. This is the holy grail of investing. The stock is trading at a ridiculously low price-to-earnings ratio, especially when you consider its growth trajectory. We're talking single-digit PE here, folks. In a market where tech stocks often trade at 30, 40, or even 50 times earnings, getting a leader like Lexin for a bargain is an absolute steal. The story gets even better when you look at the price-to-sales ratio. It's also incredibly low, which tells you that the market is not giving this company any credit for its massive revenue generation. Wall Street has put this stock in the penalty box, and that's our opportunity to get in before the rest of the herd wakes up and smells the coffee. When you find a company that is growing its profits, has a technological edge, and is trading at a deep discount to its peers and its own potential, you have to pound the table. This is what we live for. This is how you find multi-baggers. And here's a little kicker for you, a little something to sweeten the deal. LexinFintech pays a dividend. Right now it's yielding around 2%. That means they are literally paying you to wait for the stock price to appreciate. A dividend shows financial discipline and a commitment to returning value to shareholders. It's a sign of a mature, confident company. So you get the explosive upside potential of a growth stock combined with the income and stability of a value stock. This combination is as rare as a unicorn, and when you find one, you have to grab it with both hands. So why is now the time to buy? We have a perfect storm of catalysts. First, the stock has shown strong technical support right around the $7.30 level, which provides a solid base. Second, the recent blowout earnings report provides fundamental validation. Third, the broader Chinese economy is showing signs of a strong recovery, which will lift consumer spending and benefit Lexin directly. This trifecta of technical strength, fundamental momentum, and a positive macro backdrop makes the current entry point incredibly attractive. Don't wait for the all clear from everyone else. The big money is made by being ahead of the curve. Alright, let's be responsible here. No stock is a sure thing, and you have to know the risks before you pull the trigger. With any Chinese company, you have to be aware of the regulatory environment. The Chinese government can be unpredictable, and new rules could impact the fintech industry. It's a risk you have to accept. Second, there are geopolitical tensions between the United States and China. These issues can create volatility for Chinese stocks listed on United States exchanges. You need to have the stomach to handle the potential swings that headlines can create. These are real risks, and you shouldn't ignore them. The other major risk is inherent to the business model: credit defaults. Lexin's profitability depends on its ability to manage credit quality and keep loan losses low. If there's a significant downturn in the Chinese economy, more consumers could default on their loans, which would hurt the bottom line. While their AI-powered risk management is designed to mitigate this, it's not foolproof. You are betting on their technology and the continued financial health of their young consumer base. As an investor, you must understand that this is the core operational risk of the business you are buying into. It's a calculated risk, but a risk nonetheless. Despite these risks, I believe the potential reward far outweighs them. We have a rare opportunity to buy a market leader at a bargain basement price. My game plan would be to start accumulating shares in the $7.20 to $7.50 range. The stock has built a solid foundation here. To manage your risk, you could place a stop-loss order around $6.50 to protect your downside. If the story plays out as I expect, with continued earnings growth and a re-rating from the market, I see a realistic upside target of $12 to $15 over the next 12 to 18 months. That's a potential double from current levels. The bottom line is this: LexinFintech represents a compelling combination of growth and value that is too good to ignore. You have a dominant player in a massive market, a technological edge with its AI, and a valuation that is screaming buy, buy, buy. Do your own homework, understand the risks, but don't be afraid to take a shot on a high-quality company that the market is unfairly punishing. These are the kinds of opportunities that can make a real difference in your portfolio. Now go out there and look for more plays just like this one. Booyah!